Okay, so what is this strategy? So this is something I've been working on recently around breaks of highs and lows and what makes a good break, right? It's different for everyone. Everyone has a different idea of what makes a good break. So what I did is I built this strategy around making strong breaks and, breaks that are not as strong. And just to prove that this actually works, I'm going to show you some data now. So as you can see, this is the year of 2025, and these are the results here. So what I'm going to do is going to show you the results, and I'm going to show you exactly what I'm talking about, and then I'm going to talk about my plan going forward and how you can use this in any strategy. This doesn't matter whether you trade ICT, SMC, support resistance, order blocks, fibs, whatever. This can be applied to your strategy because it's to do with breaks of structure and nothing else. So as you can see with the results, the thing or the edge that I've altered, you can see here, returned me an 10% in 2025. Doesn't sound like a lot, right? But if we take this edge out and just traded the strategy normally, what do we return? 4%. So over just 2025, this would have made me an extra 6% profit, which on 100k is 6 grand. So it does make a difference. And as you can see, when we only trade the non-edge and not them together, you can see what happened. We lost 6% over the year. So what that's telling me is when we do it, we can make 10%, and when we ignore it, we make minus 6%. That's a pretty substantial difference in profit. So what is it we're looking for? So how this works, how this strategy, how this edge works is like this. When you get a break of any high or any low, what do you have at the top or the bottom of them? Right? Wicks, okay? That's what you have. Now, where this strategy is going to come into effect is what you're looking for is a break of the high or the low, like normal. So you've got the high, low, like that. That's your break there. You're looking for this break, but the difference is, and it's very, very, very simple, the difference is something to do with how it closes. Now, let me get into an example and show you exactly what I mean. So when you have a break of structure, as I said, you've got wicks, you've got wicks, you've got wicks, you've got wicks everywhere. Now, what you need to do is when you have this break of structure, the candle that breaks structure must close above or below the wick. Now, that is what you're looking for. So what do I mean by this? It's very, very simple. So let's, take GU for an example, right? When you get this, it means there's going to be a shift of momentum. So let's take this low here, okay? What do we have? We have this wick here. Now, you always want to take the highest or lowest, depending if it's a high or the low, wick in that structure point. So for example, this low here, what is the lowest wick here? Because it's a low, it's this one here. What do we need to see? A close below this wick, right? So it has to be the candle that breaks structure. So we're not looking for this whole leg of price to close below the wick, because obviously it will if it's going to break to the downside. It has to be the candle that breaks structure. So what we do is we draw the break of structure using the bodies, as I said, and then we look, what was the candle that broke structure? Well, it was this one here. As you see, it opened before the low. Where did it close? Below the low. That's the one that broke the structure. And now this is the key. Where did this candle close? Well, the candle closed down here. Where is that? Below the wick in the low. Therefore, that makes it a strong break. Now you may be going, this is simple, this is simple. Where the beauty in this is the fact that it's the candle that breaks the low that has to do it. Not if the low breaks, the candle that breaks the low. That is sort of what's going to give you the momentum. Now, obviously, this is not going to work in every situation, right? Of course not. But as you can just see from 1 year of back testing, including it made 10%, just ignoring it made minus 6%. So there's a massive, massive difference And of course, as I said, this is not just a strategy. I'm not saying that, oh, the minute the candle does that, you should just, sell. No, don't do that. Use this into incorporating into your own strategy. Use it as an edge, right? Same as, this example here. What do we have? A high. Now, you can choose either of these wicks. Obviously, the higher up you choose, the more preference, the stronger it is. But let's say we just take the wick in the high here. What is the candle that breaks structure? It's this one. Does the candle close above the wick down here? Yes, it does. Therefore, you know that you can look for buys. You could drop to a lower time frame and you could enter in this region. There's many different ways to enter, but it works on everything. Let me go to a different pair and show you what I mean. So, for example, if we're taking any specific low, obviously you have this one here that you could use, but it's just everywhere, and it just gives you additional advantage, an edge over the markets. Now, for example, you could say, right, well, Oscar, this one here was a break of structure. This was the lowest wick. This candle was the one that broke structure, and what did it do? Close below the wick. But then what did it do? Well, it bought. Now, why is that? Well, as I said, this is not a strategy. It is a strategy per se. It's an edge. This is something you can use to complement the rest of your strategy. So, for example, do you want to be buying Euro USD at 5 p.m? I don't. That's completely out of my strategy's range. But if we get this between my trading hours of 8 and 12, then absolutely, this could be a great setup. And as I said, I've only tested it a year. I've tested this all live, by the way, in these on my YouTube channel. If you look at the raw back testing videos, this is testing exactly that. I live test, live trade, everything around that. So you can see exactly how we got that data. And we're going to be doing it for 24, 25. We've done 25, but 24, 23, all of them, to build up the most solid picture of how strong, this strategy is. But as I said, it saved us well over 6% in the other years. Now, again, I haven't tested it on gold, but I'm sure it's of a similar, situation. And it might be something that works even better on a different time frame. I don't know. This is just the start. But again, if you're, looking at it from, even these, it does it all the time. So you have obviously this high here, you have this high here, which is basically in line, and you could even take this high here. What happens? This is the candle that breaks the structure. Where does it close? Above the wicks down here. Therefore, it's a stronger setup. And what does it do? Absolutely fly. Now, as I said, it is not something you should only use. You should use it in Confluance, and you need to be making sure you're using the right highs and lows. You do not want to be using, random lows like this. Obviously, that's not going to hold as strong as, true lows and highs like this, and this. But it all just depends on your strategy. So just going back to it to make it sort of simple for you, the way this works is you have, say, an uptrend, you break structure, say the wicks here. As long as the candle that caused this break closed above this wick, that is a strong sign that it will continue to the upside. Or, you could do the same with reversals. Say you've got something like this. You got this low, this candle here closed below the wick. What does that mean? It's probably a strong sell. Same exact thing. That's all you need to do. And as I said, I've tested this all live on YouTube videos, and I have the data to support it. So hopefully you found that useful. Give it a test, add it into your strategy, see what you think, and if you do have any success with it, let me know. But I will see you in the next video.